I now hand the conference over to Mr. Manish Mahawar from Antique Stock Broking. Thank you, and over to you, sir.
Thank you, Lizanne. On behalf of Antique Stock Broking, I would like to welcome all the participants on the call of Sharda Cropchem. From the management, we have Mr. R.V. Bubna, Chairman and Managing Director, Mr. Ashok Vashisht, CFO, and Mr. Dinesh Nahar, GM Finance on the call. Without further ado, I would like to hand over the call to Mr. Bubna for opening remark, post which we will open the floor for Q&A. Thank you, and over to you, Mr. Bubna.
Thank you, Mr. Manish. Good evening and very warm welcome to everyone present here on the call. I hope all of you are keeping safe and healthy during these times. Along with me, I have Mr. Ashok Vashisht, our Chief Financial Officer, Mr. Dinesh Nahar, General Manager Finance, and our Investor Relations Advisors. Hope you have all received our investor deck by now. For those who have not, you can view them on stock exchanges and on the company website. We are an agrochemical company with crop protection, with a good position in the generic crop protection industry. We are engaged in the process of marketing and distribution by procuring wide spectrum of formulations and generic active ingredients, fungicides, herbicides and insecticides across the globe. Extending this rich experience, we have also entered into biocide segment to cater disinfectants market. Leveraging our experience and product registrations capabilities, we have carved out a niche for ourselves and built a robust core and identifying generic molecules, preparing dossiers, seeking registrations, marketing and distribution. The company continues to identify opportunities in the generic molecules and corresponding formulations and generic active ingredients, preparing dossiers, seeking registrations in the relevant jurisdictions. Sharda Cropchem's total product registration stood at about 2,750 as on September 2022. Additionally, 1,120 applications for the product registrations globally are at different stages of approval. The capex for H1 2023 stood at rupees 230 crores. Every jurisdiction has different legal and procedural requirements for seeking registrations. With its rich experience, the company has successfully obtained the necessary regulatory approvals from these jurisdictions. The company is well equipped to respond to the potential issues such as as well as the readiness to efficiently respond and comply with the regulatory requirements. We maintain healthy relationship with multiple manufacturers in the agrochemical industry, mainly in China and India. Sourcing from multiple manufacturers, helping the company in getting quality products at optimal price and thereby de-risking its sourcing capabilities. Over the years, we have built a strong brand franchise within our global markets. We are benefiting through the economies of scale in our portfolio and leveraging value of our supply chain to deliver value to our customers across the globe. For Q2 2023, revenues grew by 12% to rupees 722 crores, and for H1 to FY23, the revenues grew by 22% to 1,546 crores Growth was led by better product mix and price realizations. Gross margins have been impacted by weakening euro against dollar as well as INR, leading to increased input cost and impact of general inflation across the geographies. Major currencies have depreciated against the USD in the last 6 months. Due to the ongoing war between Russia and Ukraine, over 45% of H1 FY23 sales from agrochemical business have been in the Europe, whereas majority of the company's raw material is imported from China. And payments are done in US dollars. This has impacted the company's gross margins, overall profitability temporarily, as the euro had considerably depreciated against the dollar. We are now taking certain measures to reduce the adverse impact of Forex. We have increased our sales focus on NAFTA region. We have begun sourcing in euro currency. We are optimally hedging our currencies, and we are seeking price increase from customers to negate this Forex impact. We have accelerated focus on revenue generating investments and are continuously looking to improve the operational efficiencies, which will help us improve margins. Our incessant efforts to explore newer markets and geographies while penetrating deeper into our existing ones is aligned to our endeavor of serving customers globally. We consistently strive to emerge higher on the global scale, and our approach to think global, act global, as continue to navigate and challenges. Further, our asset-light business model enables us to expand the number of products across our entire spectrum of product offerings. Our efforts on diversifying our product portfolios, widening global reach, build supply chain capabilities, and strengthening our distribution network enables us to enhance our performance year after year. Moreover, through our expertise, disciplined approach, experience, and commitment to create value for our shareholders, we are exploring better opportunities, emerging as a prominent global brand and enhancing our overall business performance persistently. With this brief overview, I would now like to hand over the call to our CFO, Mr. Ashok Vasisht, for discussing our financial performance. Thank you.
Thank you, sir. Good evening, everyone. Coming to Q2 FY23 financial performance, revenue stood at 722 crores versus 643 crores in Q2 FY22, registering a growth of 12% year-on-year. Revenue growth was led by better product mix and better price realization during the quarter. The company is focusing on value-based growth. Gross margin for Q2 FY23 stood at 23% as against 28% in Q2 FY22. So the margins are slightly lower than Q2 FY22, but better than Q1 FY23, where it was 25.4%. EBITDA for Q2 has grown by 3% to 107 crores, whereas there is a marginal decline in percentage EBITDA to 14.8%. This was mainly due to lower gross margins driven by weakening of euro against dollar, US dollar, as well as Indian rupees. Additionally, general inflation and strengthening of global workforce to support the future growth has also marginally impacted the EBITDA. PAT for the quarter Q2 FY23 stood at 12 crore against 32 crore quarter 2 FY22. PAT was impacted by higher forex losses to the tune of 38.7 crore Q2 FY23, mainly driven by weakening of euro against dollar and INR. If we exclude forex loss for the quarter, PAT has actually grown by 12% due to favorable product mix and better operational efficiencies. Coming to the split of agrochemical business, which grew by 14% year-on-year basis to 576 crores, and non-agro grew by 4% year-on-year basis to 146 crores. In the agrochemical space, Europe grew by 11%, NAFTA grew by 28%, and LATAM degrew by 10%, and rest of the world grew by 18%. Europe continue to contribute higher in terms of contribution to the total agro business at 41%, NAFTA 40%, LATAM 11%, and rest of the world 8% of the agrochemical business for Q2 FY23. In non-agrochemical space, Europe grew by 22%, NAFTA grew by 19%, LATAM grew by 26%, and rest of the world grew marginally by 1%. Europe contributes 22%, NAFTA 57%, LATAM 7%, and rest of the world 14% of the non-agro business for Q2 FY23. Now coming to half-year performance for H1 FY23, revenue stood at 1,546 crore against 1,265 crore in H1 FY22, registering a high double-digit growth of 22% on year-on-year basis. Our revenue growth was led by better product mix and better price realization. Gross margin for H1 FY23 stood at 26.3% as against 28.6% in H1 FY23. So since there was a increase in margins in Q2 over Q1 FY23, so the gap for the 6 months is narrowed down in Q2. EBITDA has grown by 4% to 218 crore, whereas there is a marginal decline in percentage EBITDA margin to 14.1%. This was essentially due to gross margin driven by weakening of euro against dollar as well as INR, general inflation, and strengthening of our global force to support future growth. PAT stood at 35 crore in H1 FY23 against 70 crore in H1 FY22. PAT was impacted by forex losses to the tune of 81.9 crores in H1 FY23. Excluding forex losses, PAT has actually grown by 62% due to better product mix as well as better operational efficiencies. Coming to the split in agrochemical business, grew by 15% on year-on basis to 1,119 crores, whereas non-agro business grew by 56% year-on-year basis to 356 crores. In the agrochemical space, Europe grew by 18%, NAFTA region grew by 19%, LATAM degrew by 6%, and rest of the world grew by 18%. In terms of contribution, Europe contributes 46% for the first half of the year FY23, NAFTA 36%, LATAM 12%, and rest of the world ROW 6% of the agrochemical business. In the non-agrochemical space, Europe grew by 39%, NAFTA grew by 82%, LATAM 81%, and rest of the world 7%. In non-agro business, in terms of contribution, Europe contributes 26%, NAFTA 56%, LATAM 6%, and ROW 12%. Now, coming to working capital efficiencies, so as on 30th September 22, in terms of number of days, it stood at 91 days. We are a net cash company. Our total debt as on 30th September 22 stood at rupees 17 crore, and our cash and cash equivalents as at 30th September 22 stood at 283 crores. With this financial overview, we can now open the floor for questions. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star in 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sameer Deshpande from Fair Deal Investments. Please go ahead.
Good evening, sir.
Good evening.
See, after looking at the Q2 results, the problem of euro depreciation continues because we have around 39 crores of loss being written off this year, quarter 2, along with 42 crores was it, I think, in the Q1. Now, you have mentioned that you have taken certain measures like price increase or that is regarding this sourcing in euro versus the dollars which we were doing earlier. So how far we have been successful in these two initiatives in the Q2 or and how much percentage of our sourcing will happen going forward in euro?
See, the percentage of, the task is not so easy.
Yeah.
The seller is also very much aware that euro is likely to strengthen once again. So he wants to also take very cautious steps, and he's not giving us a fair exchange rate conversions. We are making efforts, but the task is equally difficult.
But actually, has the situation deteriorated after after Q1 on 30th June? I think the euro was quite favorable, but after that, in September, it is now some 0.98 or so. At the current provision which we have made for 39 crores loss, now we have receivables to the tune of around 1,000 crores and payables, trade payables are around 1,135 crores. So have you taken the full impact on the receivables and payables also at this point, at the current euro rate?
Yes, please.
So going forward, the scenario currently is 0.978 or something, the euro to the dollar. If the situation goes down further, then only we'll be facing problem. But have we done some hedging also?
See, the options for hedging are also very limited because everybody is in two minds. There are some opinions which say that the euro is going to start strengthening from here, and the other opinions which will say that it all depends upon the Ukraine-Europe war, Ukraine-Russia war. So the views are not very clear. Wherever we see some light, we try to pursue that path, and we are always vigilant to hedge as and when we get some chances.
Okay, but have we been successful in taking some price increases also?
Yes, to some extent, yes.
Achha. Okay. Okay, thank you and all the best.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Sonal from Present Capital. Please go ahead.
Hi, am I audible?
Yes, sir.
Yes.
Please go ahead.
Sure. So, sir, my question is a follow-on to the gentleman who was in the queue before me. If I were to just take some numbers, roughly 50% of your sale is to the European region. And if I were to just quantify what part of your, and let's assume 50% of your raw material is being procured for Europe as we speak right now, assuming similar margins, what part of this has been converted from USD to Euro? So if I were to just understand, if you could just give a ballpark just to understand how far are we?
Sir, your question is not very clear. Can you speak a little louder and slower?
Sure. Sir, is my voice more audible now?
Now your voice is more audible, but then some of the words are getting mixed up.
Okay, I'll speak slow, sir. So I am saying, sir, roughly 50% of your sales is to the European region. Now,
Yes.
I wanted to understand that the raw material which is sourced for the European region, what part of that raw material is now getting procured in Euro? So that there is no currency.
Very small part. Very small part. It could be 5 to 7%.
Okay. And sir, for the remaining year, basically, if you were to make sales to this particular region, are there any contractual changes you have done to sales, or this is largely spot sales that you either can sell or you cannot sell? Just want to understand your obligation for the remaining year for the European region. Just to understand that, sir.
See, as I have explained in our previous meetings also, we do not have a long-term contract with any customer or any supplier. The businesses are negotiated from purchase order to purchase order, even in the same season. So we are very flexible and nimble-footed as far as we don't have very long-term obligation either to our customers nor to our suppliers.
Got it. So, how easy, just to understand, sir, how easy or difficult is it for us to redirect the sales from the European region to the NAFTA region, given that there are different dynamics, different competition? Just want to understand that. If you could explain that a little more, that will help.
Well, we have been successful in the last quarter, and our efforts are going on. We are having a better access and deeper penetration into the NAFTA markets, and the customers are appreciating our products, quality and service. So we hope to make some progress in that direction.
Okay, sir. Sir, any broader guidance can you give for your sales and maybe the forex, basically, just trying to understand, because I factor this in the gross margins basically. So can we assume that our gross margins will be squeezed by a similar amount? So for example, for Q2, if I were to just take H1, sir, our gross profit was roughly 400 crores, and we lost roughly 100 crores in currency depreciation, 80 crores in currency depreciation. So basically, we are losing roughly 5% odd. So can we just assume that for the balance of the year, the gross margins would be in the range of 20%? Because or is it difficult for you to pinpoint?
Say our gross margin should be in the range of 28 to 30%, or I would say 26 to 30%.
Okay, sir. All right. That's it from my side. I'll come back in the queue. Yeah.
Yes,
Thank
please.
you. The next question is from the line of Rajesh Jain from NB Investments. Please go ahead.
Hello, good evening. Am I audible?
Yes, please.
Sir, congratulations on a good set of number under the challenging environment. Sir, I just want to ask you the basic information. The one is regarding the registration that we have. It is there in which companies we hold all these registrations?
What was the last part of your question?
In which company's name that we hold so many registrations that we have?
Which countries or companies?
No, see, I think we have registration numbering up to I think some 2,600 or 2,800.
Yes.
They are in Sharda Cropchem name or is it in the subsidiary name?
It is in both. Wherever the authorities insist that they will give the registration to a local entity, we form a subsidiary and we obtain the registration in the subsidiary's name, but the investment for the registrations is done from the principal company, mother company, and the mother company is the beneficial owner. The subsidiary companies are, in majority of the cases, not even doing the transactions unless again the local rules prohibit that we have to do the transactions for the subsidiary companies. So ultimate beneficiary is always the mother company.
So what I have understood is it is either in the name of Sharda Cropchem or wherever the particular country demands, then only in a subsidiary, in the company's subsidiary name. Is understanding is correct?
Yes, sir. And the capital investment is only from the mother company. The root can be the subsidiary company. And the beneficial owner is also the mother company.
Okay. Now, we have so many subsidiaries. This is basically been created based on the demand or the requirement in each country. Is that correct?
Yes.
Okay. Sir, my next question is, does promoters hold stake in any group companies which are in the same line of business?
No.
So only the Sharda. In this field, it's only in Sharda Cropchem.
Yes.
Okay, sir. That's all from my side. Thank you very much.
Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star in 1. The next question is from the line of Anuj Sharma from M3 Investments. Please go ahead.
Yeah, thank you. Sir, a few questions. One is, can you just give some highlights into the demand situation in Europe?
Pardon me?
Could you just give some thoughts or explain or some outlook on the demand situation in Europe?
In Europe?
Yeah, European geography. That's right.
Yeah, the demand situation is normal. In fact, it has been better than the previous quarter last year.
Okay. The second question is, these currency upheavals would also have affected competitors and pricing. So, how has the pricing outlook or the cost dynamics of the competitors evolved?
Sir, everybody is in the same boat. The competitors don't have any special thing, and many of the multinationals are also slowly switching over to sourcing from China because in order to save the cost of manufacturing, which is higher in their own countries.
Right. So do you see scenarios of price increase by competitors as well? Because many times you have alluded to that you wait for the competitors or MNC to increase their pricing for you to make an attempt. So are you seeing that already happening?
Yes, that is happening.
Okay. And what is the quantum of price rise we could see?
What is the what?
What is the quantum of price rise? Yeah.
It is difficult to calculate in terms of percentage, but the price rise is happening, and part of the effect of the cross-currency exchange rates, we have been able to pass very slowly and silently to the customers.
Okay. And sir, is there substantial manufacturing in Europe as well? Because of the energy situation, is the cost of manufacturing in Europe rising, and hence our competitive advantage increasing?
The cost of manufacturing is increasing in Europe because of the increase in the cost of energy, and
Right.
this is also pushing the manufacturing to be more towards China and less in Europe.
Okay. Roughly, sir, what percentage of manufacturing would be coming out of Europe today?
What percent of manufacturing coming out of Europe? You mean globally?
Yeah.
I mean overall.
No, sir, procured in Europe and supplied. All right. And sir,
We don't have access to this
sorry.
kind of information. These are all very confidential, and nobody reveals these things.
Okay, and my last question is this currency movement. Historically, if you go back, when was the last time we saw this currency movement the way we are seeing now for Sharda?
Again, please repeat. The question is not clear to me.
Yeah, I'm saying that this currency movement, if we go historically, when was the last time we saw these movements for Sharda, and how did we play the game last time?
No, I can't understand. We didn't play any game. What do you want? Your question is not clear at all, sir. Currency movement for Sharda. Currency
I'm saying
for everybody.
No, I'm saying we have.
Sharma, sir, may we request that you return to the question queue? There are participants waiting for their turn.
All right, madam.
Thank you, sir. The next question is from the line of Rajesh Jain from NB Investments. Please go ahead.
Thanks for the opportunity once again. Sir, I had two questions. One, is that most of the innovators companies, they have manufacturing base in either in Europe or US, or most of them have shifted to China?
I won't say most of them have shifted, but some of them have shifted to China because the cost of energy is being very prohibitive in Europe. It is impacting everybody very adversely.
Okay.
During this, particularly because of this Russia-Ukraine war.
So otherwise, before this war, then all of them were manufacturing at Europe or US only?
No, sir. Even at that time, they were sourcing some part of their products or business from China. This is gradually happening for the last 10-15 years. That manufacturing China is increasing, and the manufacturing in Europe and USA is decreasing. It's a continuous process.
Continuous. Okay. With your experience and being in this field for such a long time, is it possible to know how much % has been shifted?
No, sir. My experience.
Okay. Now, why I'm asking this question is, see, you are sourcing from China or so, and giving, at a lesser price. If the innovator companies were to shift their entire manufacturing, requirements to China, then still will you have any price difference?
Sir, I think you have not understood the word shifting very practically. When we say shifting, that means that they are reducing their production. The factories still remain in Europe. They are reducing their production in Europe, and their sourcing from China is increasing.
Correct. So once they start sourcing from...
They are not using full capacity in Europe, and they are slowly, because they find the sourcing from China much swifter, more convenient and cheaper.
Correct. So since they now start getting their product manufactured at lower cost, So for Sharda, the price difference, whatever was there earlier, it will keep shrinking in future?
We don't see it in the reality. We don't see it in reality. In fact, our market share is increasing in the geographies.
Okay.
And of course, we are a very small player. So
Okay.
we don't see any adverse impact on Sharda's business.
Okay. Sir, my second question is regarding this currency fluctuation. With whatever the bad experience we had for last 2 quarters, in future, are we going to take any precaution in that regard?
Sir, as we have I think this question is being repeated. Even the previous gentleman had asked the same thing. We are making efforts on 3 or 4 fronts.
Okay.
One is to shift more efforts, more concentration in the NAFTA region, where we are not impacted by the current foreign exchange effect at all.
Okay.
Secondly, we are trying to convince our customers in Europe that it's becoming very expensive for us, and some of the customers are understanding, realizing, and I think they also don't have much of an option but to accept our request for increase in the margins, increase in the prices.
Okay. Okay. Okay.
These are the 2 main factors.
Main things that you are. Okay. Okay.
Yeah.
Okay. Thank you. Thanks.
Thank you. The next question is on the line of Manish Mahawar from Antique Stock Broking. Please go ahead.
Yeah, Bhumna ji, just needed some data points from you for the quarter. Can it possible to share the sales breakup in terms of a volume, price, and currency for the quarter?
Yes, sir. Yes, sir. 1 minute. You said volume?
Yeah, volume growth for the quarter.
As far as the volume is concerned, there's a degrowth in the last quarter. Degrowth to the extent of about 23%.
23%. And price and exchange? Price or product mix?
You mean revenue?
Yeah. So, realization or product mix, maybe.
Real price and product mix, there's been improvement to the extent of 34%.
Okay. And currency, sir?
2%.
2%. And what was the number for first half?
1 minute. Which number, Mr. Manish?
Volume, price, and exchange, sir. Same number for the first half. This is for second quarter you are given.
No, I have given. This is the difference. He's asking the. You are asking for the H1, okay. First half, you said.
Yeah.
Our product and price mix impact is plus 36%.
Okay.
Volume is degrowth by 13%. Forex is 0.5%.
0.5%. Okay. And sir, can it possible to share the breakup, regional volume breakup for agrochemical business?
Yes.
So in Europe, NAFTA, ROW and LATAM volume, sir.
1 minute. This is the total you want, no? Agro plus non-agro.
No, agrochemicals, sir. Generally, you used to give each and every quarter. So basically, agrochemicals volume breakup in terms of a regional I'm talking about.
Yeah, volume in Europe is 3 million, 30 lakhs and 10,000 as against 34 million in the last year's quarter.
Okay.
NAFTA, it is 19 lakhs versus 23.5 lakhs in the previous year. LATAM, it is 6 lakhs versus 14 lakhs in the previous year. Rest of the world, it is 7.5 lakhs versus about 10 lakhs in the same quarter last year. Total 63 lakhs versus 81 lakhs in the previous year.
Previous year.
And
Okay.
minus 22.7%. Yes, sir.
Okay. And the gross margin, sir, for regional gross margins?
Yes, sir. Gross margin for agro or again overall?
Overall,
Agro.
sir. Overall,
Okay.
you used to give an overall breakup.
Gross margin in Europe is 29% versus 33% last year. NAFTA 26% versus 28% last year. LATAM 24% versus 15% last year. Rest of the world is 30% versus 20% last year.
Okay, sure. That's from my side.
And
Thank you.
overall is 27.3% versus 28% last year. So it's more or less at the same level overall.
Sure, sir. That's from my side, sir. Thank you.
Thank you, Manish.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Sonal from Present. Please go ahead.
Hi, sir. Sonal this side. Am I audible?
Yes, please.
Sir, I wanted to understand from a H1 perspective, the reason for the degrowth of sales in LATAM. If you could explain that. I'm on...
Degrowth of sales?
Yes, sir. I am on I'm talking about the agrochemical segment. Yes.
Sir, he's talking revenue. Volume
Hello?
As per your slide?
Yes, I'm trying to...
Sir, I'm on slide number 22 of your presentation.
That's much easier then.
Yes, sir.
22. You said there's a degrowth from
Yes,
155 to 146.
Yes, sir.
You asked me what's the question? What is the reason?
Yes, sir. So I wanted to understand why is this happening. If you could just explain this, that will help.
This is a very small change. There can be many factors. It is not something very significant so that we can point out and say that this has been the main factor, you know.
Okay.
It can happen because of the product mix. There was one product which was doing very well in the last 12 months. So one quarter it may be a little less, one quarter it could be a little more.
Okay. Sir, I have a second question on you just to the gentleman who was on the line before me. You gave the numbers for the volume for the agrochemical business. You said that the total we sold 61 lakh on the volume front compared to 81 lakh tons. So
Yes.
what is the guidance for the whole year? Sir, if you could just explain that, if you could share that.
See, we are expecting the revenue to grow by 15 to 18%, and EBITDA to also grow by 15 to 18%.
Okay.
Overall.
Okay, sir. Could you explain a little bit how do you come to this math? Because for somebody who's tracking the company, basically, like if I'm an outsider, I would basically like to believe that there is a volume growth, there is a realization growth, which basically adds up to 15 to 18%. But what is happening is there is a negative volume growth and there is a very high realization growth, which is leading to your 15 to 18% guidance which you are giving. So, I just want to understand this, that how do you come to 15-18%? So, like 15-18 में sir volume growth कितना है, value growth कितना है, sir realization growth कितना है?
1 minute. So I can only say in general that there is a better product mix. We are coming out with newer molecules in our registrations, which is giving us a better realization. And the older products are becoming commodities. So they were having good volume, but the net gain was not so much. So those products are getting phased out, and newer products with better margins and better prices are taking their position.
Got it, sir. Understand. And these newer products, there is no how much of, sir, commodity inflation is actually baked in the pricing of these products?
No, I mean, I'm very sorry. Again, the question has not been very clear to me. Can you kindly repeat it once again? Hello?
Sonal, can you repeat your question? Sonal, are you able to hear us?
Yes, I am able to hear you. Are you able to hear me?
Yes, sir.
Hello?
Hello? Sir, am I audible?
Now you are audible.
Okay, sir. Okay. So I was saying, I understand that your product mix is improving, hence your realization mix is improving. Till that part, I think the explanation was, sir, well understood. I wanted to understand that how much of the commodity, the price rise in the commodity, are we carrying in our product mix? And do you see, let's take a product X right now, sir, for example, which was also selling last year. Product X, which was selling last year, to product X, which is selling this year. Do we expect that product price and realization to come down because of the commodity prices easing off? Am I clear in that, sir? Or should I?
No, sir. I want to tell you something. When I use the word commodity, I did not mean agricultural commodities. I was trying to say that when a product becomes older, the number of resistance become more, the agrochemical product itself becomes like a commodity. And when I say commodity, that means plenty of availability and lesser margins. It is not to do with the agro commodities, which is a agricultural product. Am I clear?
Thank you, sir. Ladies and gentlemen, that was the last question. I now hand the conference over to Mr. Manish Mahawar for his closing comments.
Yeah, thank you, Rizwan. On behalf of Antique Stock Broking, I would like to thank the team of Sharda Cropchem for providing us an opportunity to host the call. Bhuvna ji, would you like to make closing comments, sir?
Yes, sir, some small brief statements. I would like to thank everybody who joined us for the call. I hope that we have been able to answer all your queries. We look forward to such interactions in the future. We hope to meet your expectations in future. In case you require any further details, you may contact us or our industrial relations team of SDA, and also to us sometimes. We also take this opportunity of wishing you all a very happy and safe Diwali in advance. Thank you.
Thank you. Ladies and gentlemen, on behalf of Antique Stock Broking, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines. Thank you.
Thank you very much. Thank you, everybody.
Thank you.
Bye.